How's it going, investors? Ari Gutman here with the TipRanks team, and I'm excited to show you all through 3 long-term value investments that 4 to 5 star rated analysts on TipRanks are deeming as buys. We're not only going to be sharing which stocks they are, but using some of the TipRanks tools to show you all through a deeper analysis on each of them. Now, with that being said, let's get right to it. Now, investors, before we go any further, I always think it's worth noting the economic backdrop, and at this point in time, our economic future isn't exactly appearing to be all sunshines and rainbows, which is to say that inflation is still sky high, supply chains are disrupted, and we're currently just still trying to walk across this economic tightrope as interest rates are currently rising. Speaking of which, Federal Reserve Chairman Jerome Powell will be speaking out tomorrow at the Jackson Hole Economic Symposium, which has been the single biggest market mover as of late. So with market conditions as they are, which are uncertain, value stocks or longer term investments is where it may be ideal for us to be looking. And at the end of the day, value investing or dividend investing are arguably the best strategies to deploy, or at least the safest during periods of such uncertainty, as they often remain less volatile. Which all leads me now to the first stock on our list, which is Dover Corporation. Now, if you haven't heard of it, it's most likely because they are in the business of manufacturing components and aftermarket parts in addition to software for industrial companies. Now, while it may not seem like the most exciting investment, Dover Corporation is going to be delivering through on a ton of safety. After all, it was founded in 1947 and has since only flourished into a leader within its industry with a market capitalization sitting at $19.11 billion. As of this moment, the stock is down on the year by nearly 25%, trading at $133.14 per share. Hedge funds are currently decreasing their position with Dover Corporation. They have been doing so over the past few months. But on a more positive note, there's pretty bullish blogger sentiment out there, and analysts are foreseeing upside with the price rising back to $151.11 per share. Now, at TipRanks, we are seeing TipRanks investors adding more shares of Dover Corporation to their portfolios, which is of course a good sign. And in regards to the PE ratio, it's sitting at 17, which is much lower than similar investments like Parker Hannifin, Fortive, or Otis Worldwide. Now, Dover Corporation is in fact a dividend king with 66 years worth of consecutively raising their dividend. And while their current dividend yield is on the lower end, it is nonetheless a reliable one at a current dividend yield of 1.45%. Next up, let's go ahead and talk about the 7th largest retailer within the United States, Target. Now, after back-to-back years worth of strong profits and growth, profits over the last 2 quarters have plunged, and shareholders quickly began selling out of their position with Target, whereas its current share price is at $161.97 per share. That's roughly 30% down on the year. Of course, inflation, changing consumer habits, and huge market downturns impacted this retail giant, but the question now becomes whether this stock sell-off was simply just an overreaction, and then of course, whether or not Target is currently right now worth the investment. If we look into hedge funds, they clearly think so, as over 380,000 shares were purchased from hedge funds last quarter, indicating their belief in a strong comeback from Target. After all, we are talking about a retailer with a market capitalization just over $75 billion, which outpaces many of its competitors. As for analysts, they too foresee upside coming in at a target share price of $190.91 per share, with plenty of 4 to 5 star analysts giving Target their stamp of approval with a buy position. Now, Target's PE ratio is currently sitting at 18.4, which is much lower compared to one of their biggest competitors, Walmart. Of course, as a Target shareholder waiting patiently for a rebound share price, the dividend will be rewarded with their current dividend yield coming in at 2.22%. And finally, our last stock, Emerson Electric, which was founded in 1890 and focuses on the manufacturing of process control systems, valves, and several analytical instruments. As of this moment, Emerson is down on the year nominally by 3.83%, trading at $86.73 per share. However, given its low PE ratio when compared to similar investments, coming in at 16.4, in addition to a dividend that only has been increasing over the last 65 years and currently coming in at a dividend yield of 2.31%, it may be an investment to look into at this point in time, with investors across TipRanks feeling similarly as they add shares of Emerson Electric to their portfolio with strong investor sentiment across the board. Now at this time, analysts are also projecting further growth as well as a target share price of $96.44 per share. Scrolling down, we can see those positions, which are just either buy or hold positions at this point in time. As for this investment safety, it has a lower beta and over a $51 billion market capitalization. Now investors, that's all I have for you today. Please let me know your thoughts down in the comments below on whether these stocks are within your portfolio or if they're on your watch list as we move into more economic uncertain times. Now just before we actually conclude for the day, please remember that this video is not stock advice, but merely a means to showing you through the TipRanks platform and how the tools on TipRanks can help you with your investment decisions. Now until next time, thank you for tuning in.